All right, welcome back to the Everything Property Podcast. Now, a lot of people claim to be the best and often there's nothing to back up those claims. But for today's guest, he can confidently say he's the best buyer's agent in Australia after being recently awarded the title. He's a guy I've been personally following on socials pre-COVID since the days of Investor Pool and his whiteboard sessions. And he's often referred to as the property guy, and he's named one of his podcasts after how much of a nerd he is in data. He's Kiwi born, so don't hold that against him. But Mr. Arjun Paliwal, welcome to the show.
Mate, thank you. And the Kiwi born part, you can't hold it against me when we're that good at rugby union.
Yeah, that's true. That's true. I'm not too much of a fan of league, but I mean union, but I'll give it to you. The All Blacks are very good. Look, mate, thanks for coming on. As everyone may or may not know, you've just been awarded Buyer's Agent of the Year. Congrats. 5 years of business. Huge to be able to do that considering how many people are out there in the space and have been operating. What I wanted to do today, we're talking about everything buyer's agents. You're the best one in Australia. So we basically want to introduce people. We're in the foundation 2 of this podcast. We're talking about building our team. And obviously, as you know, for people buying their primary place of residence as well as buying investment properties, they're going to be needing a buyer's agent. So if you want to run us through, I've got notes on you, and it's probably embarrassing how much I can bring up on you, but if you want to run us through a little bit of an intro, sort of, after school, coming and working with the Commonwealth Bank and that sort of thing, where you're at and how your property journey really started.
Yeah, so property for me started at the dining table of home, really, because hearing my dad go through all the stories of what he enjoyed, the deals he was looking for, the deals he'd missed. I think that's a story as well that many people don't talk as much about, like how many times my dad would talk about, oh, if I had bought this one, this would have happened, but your mum said no, or your mum said this. I'm like, dude, come on. You're just chickening out and you're trying to find someone to blame, right? And I kind of hold that against him growing up, but no, he did well with there. I think the main thing is that's where it started, just the comfortability of chats about money, property, investing, going for drives with them. He's a mechanic and been fixing cars since he was 14. So 65 years old now. So that's a good, 50 years. And he was someone who really started the bug for me in terms of driving past staff, talking about things. And then from there, fast forward, I'm 18 years old. I move over to Australia and I'm trying to get a job in Australia as you do. Now, crazy enough, I was applying for everything. I'm talking sweeping hairs at the barber.
Oh, dear. Yeah.
I'm talking clothes stores so I can get hookups and staff benefits and walk away with a cool snapback hat or something.
Oh, yeah, in the early 2000s, I can imagine.
Anything I could get my hands on with staff benefits and try and work at Westfields, hand CVs out, walk through, and nothing was happening. And so I'm video gaming out at home and my dad's just like, this kid's just not going to do anything. Like, he's just chilling. And I'm waiting for my uni to start, and he goes, go apply for this job. I met this guy at Commonwealth Bank. I'm like, turn over to him with my fringe all, left side pierced with the streak of blonde in the hair, and I'm an 18-year-old kid looking at him. I'm like, come on, man, you're not getting me any job at the bank. I apply, and I get a job as a bank teller. Now, that was the game changer for me, because for me, curiosity was the key. And as soon as I'm in a world where you actually get paid to ask people questions about their money and they can't say no to those things because they probably want something from you, whether it's an account, whether it's a credit card, whether it's a loan. That's a pretty cool thing, right? It's just about how you look at it. Some people look at it as I do my job, I clock my hours, I leave. But other people like myself were like, hold on a minute. I get all the information. I get everything here. I get unlimited career growth if I really pursue this and do well. I get a large organization with layers and proven things. You just follow what's already proven. You don't have to do something new. You just have to do the good things the best. And you just keep going on. And from there, I naturally saw lots of people with lots of properties, lots of loans, good stories, bad stories. Fast forward, combine it with a investment property journey of my own. Suddenly, I'm in the career from buying properties my own, inspired by banking and seeing what the customers didn't do. And then, of course, saw problems in the industry, saw some good things in the industry and wanted to fix them, but also align the gift, the passion, all things together.
Okay, and so the story goes, what did you start on? Do you remember what you started on your first job at the Commonwealth?
In terms of income-wise?
Yeah.
I think it was somewhere between 38 to 42K.
Wow, okay.
But
crazy.
tell you what, like somehow when you're just so in the zone of work and you wake up real early, you're working all the way till late at night, and you're just in it, you don't have much time to spend money. So when people don't have certain wages and they think that they need to have a certain wage, like you don't realize that it's not much money because you're not spending much. You think that's everything you need, because if you're waking up at 6, 7 a.m., getting to the office and you're at 8 a.m. all the way through, and then 6, 7 p.m. you're staying back, where are you spending that money? So even though it was, yes, an entry wage for me and it was a starting journey, it's not like it was low by any means, because mentally I'm just like, this is all I do. I just grind, right?
Live at home with the parents. They take care of all the bills. You literally just got to pay for, maybe something on the weekend. But
my Subaru Liberty, that's what I was paying for.
Subaru Liberty, yeah, okay. So you're there for 7 years. You progress through the ranks. You change a few branches and stuff like that. From what I can gather, you have about 9 properties, and then you call it quits. Your first property you're buying out in southwest Sydney, 970K?
Northwest Sydney, 970K, and it's a suburb of Glenwood.
Glenwood, okay, yep. So that hillsy kind of area, Hillshire. I saw in my research as well, did you use the BA back in the day, the next 3 properties after that?
After that one I did, and the interesting story there was that when I was in the banks, buyer's agents were coming in and out, and it was a very new thing. And I was like, what's this? Yeah. And I think there was either a mutual friend that introduced us, or I was doing their banking, one or the other. But the main thing is I was inspired by their portfolio, and was like, hey, why not give this service thing a go? And being so engulfed in work, I was very time poor, even though I had the desire to grow a portfolio, the customers around me to see what works, doesn't work, the knowledge of lending through approving and reviewing so many home loans. I still didn't have the time to go out there and get it done. And so, I engaged a buyer's agent for 3 properties from there, and I learned what went well and what didn't go so well. And I think that from there catapulted my journey ahead. Okay.
And what sort of, you decided to call it quits from your main job. I saw that you enjoyed your time, you did a bit of travel and stuff like that. But at what is the 9 properties, what is the passive income that you were getting from those properties where you thought this is better than my job, or if I don't need to work and I'm bringing in this passive income, I'm happy to quit? What was like the amount that you were in passive that you were getting from those properties that you were like, yep, this is good, I can quit?
Yeah, it's a good question. So the first thing is, when you're that portfolio, like when your portfolio builds to that level, you get a moment where you have to realize that to get it to a level at a young age to be able to then buy that many properties quickly, you probably weren't spending a lot, which means you don't need to aim for the 100K, 150K targets that everyone talks about. I think my passive income at the time was somewhere between 38 to 45K.
Wow.
Right? So that was an interest-only passive income. So very transparent here to say that wasn't going to last me forever, was it?
No.
Because guess what? Yes, I had a period of my banking days where you could click one button and turn your loan to interest-only for 5 years. Yeah. But just as I was exiting, those rules changed, which meant that had I had the interest only come off from 2018 to 2022, if I didn't have the paperwork to show the banks that I'm still in good coin, they were just going to say, back to P&I you go, and suddenly that passive income doesn't exist.
Yeah, you're in a bit of trouble.
So when I was leaving work, there were 3 variables. Number 1 is I had a small passive income that could cover my personal bills. Number 2 is I knew that it would last for 4 years, and I wanted to give life a go. And then number 3 is I had the loving and caring support of my wife, who said, hey, I'll hold the fort down. I'll do my thing. Let me go crush it, and you figure it out. Now, I could not work full time and figure something out on the side. I'm too committed to my craft, wherever that be. If I'm a street sweeper, no one's going to be a better street sweeper than me.
Wow, man. Goal, yeah, I resonate with that stuff.
And I'm just going to be there looking at it, meticulously understanding it. So me sitting at CBA, I'm just like, I can't, it's not me. I can't sit there and focus on an exit strategy, a way out, and someone's paying me a salary, and I just feel like a crook if I do that. I'm not saying people can't plan and think at home on the weekends. I just feel like if I did that and try to start side hustles and do all of this sort of stuff, to me, it just wouldn't feel right. And so from my perspective, I quit without the actual business started.
Wow.
And I said to myself, let me go enjoy a bit. My wife's covering the fort. She's awesome. I've got a bit of passive income coming, but it ain't going to last forever. And as the months progressed, I started Investorkit and decided, okay, let's give this thing a go. And my worst case, right, that was my 3rd principle. My worst case was that I don't get this working.
Yeah.
I was 25 or 26 when I left. I'll come back at 29 to a decent six-figure to double six-figure job, and my wife still loves me, hopefully. My dog still loves me, hopefully. My dad still loves me. Yeah. Still have a bunch of properties, and go, look, you know what? I can grow old knowing I gave it a go.
So tell me, when you started Investorkit, you popped off straight away because I saw you must have had some money saved, because I was like, shit, this buyer's agent thing popped off, because it wasn't like a week later from starting Investorkit you bought a new car.
Well, my wife bought the new car, and she's got the income going. Mate, I'm not buying you a new car on a 38K passive to 45K passive, roughly there.
Well, I did know the passive income, so that's what I was asking. I'm like, well, okay, if it's only 35, 40, the brand new car, that's very interesting. But I just wanted to, ask, and I wanted to make sure. Okay, and then you start in Investorkit. It takes you a year and a half to purchase 50 properties for other people, and then we look at sort of 2022, your business has moved on to purchasing in the calendar year 238. So phenomenal growth. And I guess the question I had for that is what would you put that down to if you had to summarize it in a few key traits? Would you say it's your attitude and your all in, balls deep kind of thing? Or what would you put that down to, the extreme growth?
Firstly, I think your customers make the growth easy, right? And so from that perspective, just looking after people, as simple as it sounds, extremely well, as if you're buying for yourself, being available for them, doing the things that 1% extra that someone else may not typically do, just not having any sort of like expectation that because they pay you for a service, you give them a service that you're handshaked and you're equal. A customer should always have a one-up on you, in my opinion. Like, a customer's always that one step ahead.
Clip
right?
that.
And so they should have a one-up on you, because they didn't have to choose me. I was young old Arjun starting things. They could have gone anywhere else.
Very true.
And secondly, they don't have to repeat with me. They don't have to tell their friends about me. But in all those things, they chose to. So in my opinion, I'm forever grateful and forever thinking of it as a privilege. And because of understanding that it's a privilege and it's not expected, what do? You work hard for it. And then you suddenly surround yourself in a culture, in a company with vision and values around you of people where they go, hey, we want to be on the mission just like you. We want to be there and do those things just like you. It starts to be a contagious environment, and suddenly it becomes easy when you have a team. And that's the thing, right? People always feel like they have to do everything. I still kind of feel like I mentally do everything. But at the same time, I look around me and I'm like, wow, I've got a team that's really stepping up and putting their all forward. And when customers, my favorite moment when I realized this is really going somewhere and this is really scaling, is when all my team started getting noted on testimonials. That was special.
Mad.
I see Nikita pop up, Vanessa pop up, Kane pop up, Kevin pop up.
Shout out Kev, yep.
All these names coming up in testimonials, that to me was the moment where it's like, hey, it's bigger than me now. It's not just me. It's everyone here coming together to get to those greater goals, not just for us, but our customers. But that's the starting point. Customers looking back and realizing that they wanted to work with us again. They tell their friends, they tell their family. And then I think from there, it's just a matter of realizing that you're in a position of, it's privilege. It's not something you should expect. And I think knowing that and just walking into work each day with that thought means that you just put in your all.
Okay. Amazing. What have you grown the team out to now?
We've got 28 people in the team across various divisions. And this is a vision I always went back to from the banking and private banking days. I feel with the industry, yes, everyone starts from somewhere. I too started from somewhere. I was one person, and that should be the focus for everyone. But over time, if you don't build a company to support your clients, I'm of the belief that you're selfish. Okay?
Interesting.
And my thinking there is this. Customers deserve an array of specialists, not the jack of all trades. And so from my perspective, I went down the rabbit hole becoming a specialist in research and data and wanted to keep getting more and more specialized in that area. If a customer decides like they want the best of everything, right? Just think of it as sports thing. Business and sports are so similar. You don't have the physio that's also the heart surgeon, that's also the, the massage therapist, and 10 other things. And then they're out there, your coach as well, your weightlifting person. They get specialists to build a room of people around you. And I first saw this approach in private banking in my days in CBA. And there was this thing called the 5-to-1 client ratio. And I don't have the exact words. I think it was like a wealth specialist, the banker, the associate, the director. And then there was also, I think, either an insurance person as well. So you've got insurance, wealth, associate/admin, banking and lending, and then leadership.
Okay.
You've always got someone who specializes in something to help you, and you've got a team of experts that are in line and supporting each other. And so I went on this journey realizing if I don't get to that level, I'm going to be someone who essentially picks up a phone call. This is Arjun here. Picks up another phone call. Yep, marketing. Now I'm picking up another phone call. I'm doing my bachelor's in finance. I'm picking up another phone call. I'm trying to negotiate a deal. Then I'm kind of making my social post on the internet. Then I'm writing an email. Then I'm sending a WhatsApp message. And if I'm doing all of that, how is that customer getting someone to take off them the time, the duties, the pressure, the research, the support, the negotiation expert? You can't possibly do that. At the start, you can because the volume of clients are lower. But if you're doing a good job, automatically clients are likely to repeat, tell their friends, tell their family, and you can't, as a business owner, tell me you say no to them. But what do many business owners do? They'll get pretty selfish. They see the high profit margins, and they'll see that if they just look after many people and then do it as lean as possible, they're going to be more profitable. To me, my profit margins drop every year since I've been running the business as a percentage. And I'm okay with that because my impact is rising still. And the overall consistency of service still maintains itself with, almost 200 5-star reviews, and we're still averaging 5 out of 5 star.
Yeah, and your volume's increasing anyway, right?
And our volume's increasing. So from our perspective, the volumes are and should naturally increase. Like I had this consultant once tell me, hey, what if every customer in your business referred one person? I'm like, game over. And he's like, so if that's how easy growth can be, shouldn't you get the best team members around you to support you, knowing that growth is around the corner because you're going to deliver a good job, rather than constantly chase a new customer? And so from that perspective, that made me committed to building a team. And if I didn't, I'd be selfish and letting my customers down because I'd just be greedily trying to get all the profit to look after them as one person. And that's not fair. At the start, it's fair because that's just like any business starts somewhere.
You're small, you're starting, but
that's the journey on the team and why I'm passionate about growing it. I want 50, I want 100, I want 200 people, because if I don't, I will let customers down. I just don't want that.
It's a good point, and probably leads into what I want to speak about next, and that was the need for a buyer's agent. People think that they can take on and purchase property themselves. Definitely they can. However, I think, and you spoke about it. You spoke about it a little bit as well. You touched in there that you guys are known for your data and your research. The more content I consume on buyer's agents, I sort of pin that buyer's agent with what they're really good at. Like they're good at their strategies, like potentially they're really good at finding cheap deals, around 200-300K, or they're really good at just finding good opportunities, market value. But I feel like I peg Investorkit with the data and the research side so much. You've got your podcast that you talk about it on, but I suppose what would be your main sells if someone's listening to this thinking about using a buyer's agent? What would be your main points in terms of them wanting to use one? If you had to write a list, or if there was some things that would line up that they go, yeah, that relates to me and my circumstances, what would those main sort of top 5 or 10 points be, do you think?
Yeah, this is a really good question. However, I'm going to go a little bit of a different approach with this.
Go for it, man.
I'm going to shoot myself in the foot by saying this, but I feel this sort of transparency is needed. You don't need a buyer's agent to buy property. That's the first thing.
Exclusive, massive,
okay.
Massive for you to admit that.
Right.
For you to come on this podcast and admit that, huge.
Exactly, right. The second thing is, in history, the majority of Aussies haven't been using a buyer's agent to transact. And lastly, I'm not here to tell, either here or any other area, that everyone should use one or everyone is going to use one and that I'm going to look after everyone. I just want to give you some numbers for some context that I broke down whilst crafting out some of our goals.
Yep.
There are 175,000 investment transactions that take place per annum on average. There might be some good years above or lower. And in Australia, on a 30-year average, 25-year average, what do you want to take from CoreLogic or anywhere else? Properties, houses, 90% of local government areas have at least grown by 5% plus in compounding.
Yeah.
So let's be honest and say that you don't need me to be okay in
Everyone's
property.
going to be all right. I remember
Everyone's
this
gonna
on
be
your
all right.
podcast. Yeah.
So I'm not here to also claim that I want to look after everyone. There are a select few who see value in what I do. There are a select few who feel buyer's agents are going to help them. And there are a few common traits I notice with these individuals. Also, if I was here to say everyone's going to be a 1%er because I'm going to be able to get them to be 1%ers, then how the hell is that a 1%er? Because now everyone's 100%. Yeah. Do you know what I mean? Yeah. So I call bull on me sitting here if I was to say everything needs to be buyer's agent, because that's just me being biased as an industry person. What I would like to say is this. If you're sick of missing out on property, if you want to avoid costly mistakes, if you want a little bit more access to more property than you typically would, than just searching online. If you'd like to have a proven, tested research process that has outperformed the market, national averages by at least 29% per annum in terms of, like, if you took a first-year valuation, that is, and you compared it to national averages, last 5 years, we've outperformed the market by 29%. And so at least, and sometimes more, 30, 35, 40, depending on which year you take over the last 5 years. So what that means is those people are the ones who are seeking that and have the funding position and capability to do so, because we're not cheap. We're not here for everyone, right? And so if you combine all those factors, plus the combination of I don't want to do this just to do it when I have money. I want to do this with a strategy, a plan, an end goal, and reverse engineer, and do it with people who've done it for others hundreds of times per year and for themselves. Our team alone owns over 50 properties. Just our team alone. Mad. Right? So that means our team is full of investors. Our team is full of, I think, a quarter of my team are clients that have just gone and said, I love what you guys do. I want to grow a portfolio just like you've helped me grow for others. I want to be in your team and I just want to do anything I can to be there because I love what you guys do. Some people in our team have $9 million portfolios. Some people have $3-4 million portfolios. Some people have just started investing. The main thing I'm trying to get here is that we're here for those with those challenges that want support, are able to pay for that support, see value for that support, and just want it. And you know what? Even if, say, 600 people a year, which is one of my goals to get to.
How many?
600.
Wow.
One of my goals to get to, if 600 a year come through, we're automatically would be one of the biggest buyers agencies in the country, right? Now, that is only 0.33% of that 175,000. So I can't sit here on a pedestal and say, everyone use a buyer's agent, everyone should be using buyer's agents, because even if I was one of the biggest business owners in the country, helping so many people craft their journey, create massive impact, I'd only be looking after 0.33 of investors. Yep. And so the main thing here is we're not here for the majority, we're here for the majority who want to be the minority. And so from that perspective, that's who we help. And I understand that there are many people, just like there have been in Australia's history, who can transact without one, will do well without one, and I'm here to give them all the research for free, give them all the insights for free for them to do so. But if those challenges resonate to them, hey, we're $1 away and they'll reach out. And if not, we have enough advocacy from our customers to keep going, keep growing, and we're going to be okay.
Definitely. Highly recommend it. Investorkit.com.au as well. You guys release articles and white papers every single weeks and months. If you're in the property industry or you're sort of dabbling in a bit of research and you haven't come across Arjun's any of his information or content, I'd be surprised, but I'd also recommend you definitely dive into it. Now, suppose because of the quality that you guys operate at, surely you've had some horror stories, or you've heard. Maybe have you heard any horror stories from clients from, what they've tried to go on and do themselves, or any messes that they've got themselves into? Anything like that anyone's come to you to sort of fix?
Yeah, there's been 3 things that come to mind. Is number one, the people that come to us and the amount of portfolios we see, we look at their actual breakdown of the assets, and there's either number one, their first property, an affordable unit or townhouse somewhere.
Chavis. Yeah.
or number 2 is they've gone on a shopping spree with another buyer's agent, and that too was affordable townhouses, a unit somewhere.
Yeah.
And so the biggest thing is they have these assets from Melbourne to Sydney to Brizzy, and they look great, these properties. They're very affordable. They're in great suburbs where the food's great, the coffee's good, the music's good, everything's good. Yet they don't perform. And so I think that would be the most common scenario, playing fixer-upper to people who buy these dud units and townhouses and high-rises and areas where they look good, sound good, but they don't do good. And typically these units have been, over the last 5 to 10 years, averaging sort of 1.5 to 3.5% compounding growth, sometimes even sort of 15 years. And that just sets people back. So the first thing we're doing is going, hey, that's okay. Don't fire sell everything. Let's see what your capacity holds to buy the good stuff for moving forward. And then when there's an opportunistic time where you feel like, hey, I either have to because I'm stuck now, or I want to because the conditions have improved, they'll probably let go of those assets, restart. And I think the biggest thing I share to people out there is that don't feel like you can't invest again. Don't feel like you can't get it right again. The truth is 3 to 5 properties, debt-free, over 20 years at affordable purchase prices are enough to get a 6-figure income inflation adjusted. And so from that perspective, I think many people underestimate kind of like, you know, what goes into the thinking and the mindset of buying, but they overestimate how bad a property can be if it goes bad. You can get it right. I've gotten duds in a portfolio at the start, and then I've gotten it right afterwards, and they've been very special. So that's kind of what I would say, you know, to that moment where I think of people's, you know, portfolios and the biggest fixer-uppers we do.
Okay. And have you, in those early days, would you say the ones that you purchased with the other BA, that would be your duds and your mistakes that you made?
I'd say out of the 3 they got me, 2 were massive mistakes.
Really?
1 was great, 2 were massive mistakes. And it's really good learning. Because at the end of the day, I had confidence in myself to grow my income.
Do you still have them?
I don't. Those 2 I don't, one I do. But I mean, I had the confidence in myself to grow my income, grow my savings, achieve my goals. And so if you just have a couple of subpar properties along the way, you can adjust, adapt, and focus on those major things that you're focusing on and then get the right ones. And I did. The decision afterwards was the best decision I made on a purchase. So from that perspective, that was my learning on those earlier 3.
Yeah, okay. What are you up to now?
We're up to 17 properties.
Yep.
And I'm taking a small pause. And what I'm trying to do now is, because of the growth of the business, we're, you know, keeping that as a core focus. But so far, for the last sort of 8 years, I've purchased a property every year, going back the last 8 years. And so I started the investing journey
even
in 2015.
during when you just in the first 2 years of starting Investorkit?
Yeah.
Okay.
So that was tough. I had low doc loans.
I was going to say it would have been interesting to see how you got those over the line.
I had low doc loans in 2020. I had, you know, very affordable purchases in some times of the years. So the main thing is I had a goal of making sure every year I made a purchase. I haven't made one in 2023 yet.
Oof.
I made 5 in 2022. So hopefully that's enough to, you know, make up for 23. But
I always see your story of Burnie, Tasmania, the 4 units for, what was it, $365K, the little renovation, and now renting for like, what?
$1,150, $1,200.
$1,150, $1,200.
Yeah. I think that one there should be the asset that teaches everyone a bunch of things. Number 1 is the low socio-demographic does not define its capital growth or lack of growth success. Number 2.
Can you say that again?
Yeah.
Because I often talk to mates and I talk to the boys at work and I talk to a lot of people about that, and they hear, you know, even in Sydney, for example, when you start to hear those low socioeconomic locations, a lot of people go, oh, why would you want to invest there? And they have their personal emotions attached to it, which, as you know, lends to sometimes incorrect decisions. So talk to me about low socioeconomic does not impact or does not have a direct effect on the growth.
So I think many people forget that areas gentrify, areas see change, and everyone needs shelter, right? And from that perspective, shelter in all rings moves up in prices over time, and so people adjust accordingly. Every blue chip area today was once a low socio-demographic area.
True.
It's crazy, right?
Yeah, look in Sydney, like Redfern and all Potts Point in around the city.
It just expanded. The city grew out. So once in a while, someone used to be 10 kilometers away from the city and go, oh, you're like 15 kilometers away? Yeah, sure, it's a long, long time ago.
Yeah.
But I mean, that's just the expansion, the urban sprawl, the change. And that's just one example. But the main thing is that affordability and prices of those areas, they're already factored in. and I look at the examples of Southwest Sydney and Inner West Sydney, some suburbs have a 3 times multiple in Inner West Sydney about 10 years ago, and they still do today.
What do you mean by 3 times multiple?
So example, a 700K house in the Southwest might be 2.1 million, 3 times the price.
Yep.
Right? And so from that perspective, like there are markets that have that gap in pricing and they still retain those gaps. And so from my aspect there, housing is short in certain areas. And so there was less houses for sale, less houses for rent, less houses for construction. If someone needs shelter, whether they're in a certain demographic or not, there needs to be some sort of increase in price because more people of that demographic are still going to compete for less properties for sale, less properties for rent, and so forth. And so that property was the biggest success story I've had. It doubled in price pre-renovations in about 3 years. From that double in price pre-renovations, I did 150K or 138 or something renovation on it.
Yep.
And then it grew even more than double on
What's
that renovation.
What's the value now, you reckon?
1.15
1.1
was the last val.
Come on, man. 1.1. You bought it for 365.
Yeah.
And it's running for 1,100 a week.
The town has 20, 30,000 people in it. Wow. Do you know what I mean? Burnie, Tasmania. So I think the key thing here is it was a affordable purchase. It was a regional city. It was in 2017. It was when everyone was saying don't go outside the capitals.
True.
And you can't tell me this whole COVID boom thing because it already started growing in 18, 19, and 20 just before COVID, and it was already outperforming the majors during those years. So the key thing here is that when you survey a local economy, a shortage of houses, affordability, and then all of a sudden these things come together and they start to create capital growth wherever it is in the nation.
I'll take 3 of them if you can find it for me.
Mate, if I wish I had gone back and had the capacity to 3-4 of those, I
imagine. And you've got one commercial property?
I've got 2 commercial properties.
You've got 2 now?
And so from the perspective of commercial, that is my next focus. So our vision here as a family is that we've finished our residential property purchases. We've got enough in the base to give us the compounding wealth. And I do the same portfolio mapping for myself as I do for my clients. And so our portfolio mapping was, if we have our current portfolio, look at it out 20, 30 years. Where will it be? Are we looking at each other and we're happy with it? Yes, we are. And then we go, okay, well, now that we're happy with the wealth building side, the generational wealth side, the options if you had to sell some stuff side, now let's just go purely cash flow plays. And so now we've stopped residential property and our plan is to buy a commercial every few years.
So stopping at 17, what's the value of your total portfolio?
Total's just under 12 million now.
Okay.
And then in terms of debt, it's somewhere between 6.5 to 7 million.
Wow.
And so from a perspective of cash and offset, we also like to have at least 1 year of buffers for the portfolio sitting there. And then about 6 to 12 months of buffers for your business that we run from fixed expenses. That's kind of how I like to operate, just to make sure I stay safe, not a cowboy with all the equities
buffer king,
and everything.
Man, the buffer king, Mr. Arjun Paliwal, 25K a property.
That's it.
And so just quickly to wrap up, though, I'm interested. It's probably a conversation for another episode, but commercial property, in your opinion, comes in the later half of your portfolio when you've got the equity to draw down because of the 20, 30% and the price, really the $1, the $2, $3 million that you need to be in the commercial game for, and you need to come up with that 3, 4, 500 grand to make those purchases. So you reckon it's probably something that's suited to investors further along in their property investment journey? Would you say that's...
It depends, because I've had some clients who I've helped them get a large amount of commercial properties at the start.
Really?
Yeah, and I'll tell you how I define the two. So number one is if you're on a salary, and even if you're on 200, 300, 400K, I'd still consider it salary, like instead of like the similar incomes to what certain business owners make. But if you're on a salary under salaries / bonuses under $500,000, I would say that your journey should look like multiple residentials to begin with, build wealth, create something that's steamrolling with equity. Then you're taking the equity and then using it to go into commercial down the track. Once you've built your assets that compound over time, that at a greater rate, the assets that are easier to exit, easier to rent out, diversified across the country, and they set you up for multiple things: exit strategies, generational wealth, just compounding holding, seeing the number get there and you're okay with it. And then you're moving on to commercial to really bring it home. Because with the commercial, when those things get to debt free at some stage in the future, game over. Like that will, like one commercial and you're super even debt free, obviously pending the advice from right advisors, that there can be a difference maker. So in my opinion, that's the typical. But when you're a business owner and you have a larger income than the sort of 2 to 500K, and at the same time you have a larger ability to save funds, and you might be more mature in age, because most businesses, they don't rocket away in your 20s and 30s. They're usually those who've put in the hard yards, worked all their life, worked up ladders, started something, given it a good decade, compound energy in business as well, and they're in their 40s and 50s. Well, I like sometimes in those scenarios, starting with commercials if their cash position allows it. And with commercials, you've actually then secured your end income. So mentally, you know that if these 2 or 3 commercials get to debt free, I'm okay.
Yep.
And now you transition to some residentials to insulate them and support them. And you're like saying, hey, I've got a few residentials around these properties now that in case I just needed consistent rentals, in case I needed to exit some strategies, in case I needed to buy, sell, clear the debts on my commercial, or generational wealth, easy to understand for kids, that helps. It just depends on your position, your trajectory, your timeline, your goals. I've done things in both scenarios for clients, but I would say the most typical is residential transitioning to commercial.
Perfect. I love the wisdom from that, and I completely agree. To wrap us up, Arjun, can you give me, I've put it in the show notes, a golden nugget, a piece of information you can share with the audience today that they probably haven't heard before and that you haven't shared, if possible, if you haven't shared on your podcast or social media? Is there anything you can leave us with to set the scene?
Yeah, this is a tough one. So my thing on that note, I'll give something with regards to property investing, and then I'll give something with regards to just life, business, income, whatever you want to look at it. I've sadly shared this before, but I'm just so passionate about this that I want to share it once more. Is the biggest thing that helped me with making some pretty special decisions that have gone well for me was building the best worst case. It's one of my favorite things to do because it just makes life so easy if you do it this way. And so I'll take you back to a couple of examples. When I left work, you'd call me silly for not leaving work. You got a little bit of passive income. You jumped in the property game early, so you know that if you came back, lost some years, you'd probably still be okay. You've got a very supportive partner. She's crushing it in what she does. And you haven't left it for too late in life, so you'll probably still be okay. And you left with good terms and work. You put in the extra yards and got education as well. I got my master's degree and did all that. And you set yourself in a position that if things don't work, like you don't feel as bad. So now what's the difference between my approach now versus what someone else's approach is? Well, my approach had no sense of desperation. It had a sense of give it a real hard go, knowing that you're going to be okay. And just to have no weight on your shoulders, because you're not constantly checking a bank balance or constantly looking at the food in the pantry or constantly looking at, anything that would mentally hold you down and question all your thoughts. I feel that people should aspire for that. Now, I get you, there's going to be people who basically need just this back in the corner feel approach to punch their way out and be okay in life, and that's them. But I can't do that. I need to be going, hey, my worst case looks so good, so you're an idiot for not doing it. And so if people approach anything in life with that, to go, hey, look, I'm going to make these investments because my worst case is I got these 3 or 4, stuff it, just do it, just give it a go. Or my next job, hey, I want to give that job a go. I want to start that business because what's my worst case? Well, I'm doing okay at this job. I'm doing okay at this industry. I'm not hurting anyone on the way out. I don't have any bad intentions. I'll give someone a phone call, and if my work was respectable enough, I should be able to have a job come back pretty easily. And I think people go through life with too much thinking on, oh, what if that happens? And what if this happens? And what if that happens? Just make the what if feel as good as it can. Yeah. And you won't give a crap about the what if happens. And that's my biggest thing, because you can apply that to anything. And that's how I'm going to, build a $100 million plus company or portfolio of companies. That's how I'm going to build, impact to set up our own charity organizations. We're having the works, and we're already supporting things in the works as well. How I'm going to have multi-million dollar, portfolios for myself and my clients, because I just know that if I don't, I'm still okay. So why not give it a go? Why not increase that impact I can make to others, myself, my family? And so I think that's my biggest thing for someone, is that if your risk appetite is not that high, just do what I did and create the best worst case you can, and then give things a go. Because whilst it might look like I take a lot of risky decisions, I don't, man. They're so calculated. They're so thought of. I have a couple of moments where I have some pretty cool stories here and there, but most of them were very well calculated with the definition of my worst case being pretty darn good. And I hope everyone builds the best worst case they can, so they look themselves in the mirror and go, you're an idiot for not giving this a go.
Arjun, appreciate the wisdom, and I totally agree. When your worst case looks that good, then you become a very dangerous person, because you can go hell for leather and dive in on whatever it is you hope and do. I appreciate you coming on, and I'm hoping that everyone listening to this has found some value from it. I guarantee you have. I know I have. And if you think there's a friend or family member that could also benefit from it, please share it to them. Arjun Paliwal, thank you for coming on the Everything Property podcast. I really appreciate your time, man.
Appreciate it, mate. Thank you again.
All good.